What is a particularly important example of a protection gap?
There are a number of examples of protection gaps. They range from things that we would expect to hear, for example, cyber risk, which is still overwhelmingly uncovered, to things that we would think we'd already be quite good at, like natural catastrophes, where we know how to do it, but we still don't have the information and the will to make sure that the rest of the world is solved. But they're all around us.
Traditionally, there have been protection gaps in health insurance, in natural catastrophes, life insurance, or business interruption. However, what should concern us more nowadays is the protection gap in cyber risk. Current insurance coverage in cyber risk is almost negligible compared to the extent of potential damage that cyber risk can cause to tangible and intangible assets related to new technologies and digitalization.
There's a classic example of a protection gap. If we go back to 2016 and we think about Ecuador, they had a disastrous earthquake and it cost the government $3.3 billion and almost no insurance was in place. But then you go to somewhere like New Zealand and the disastrous, tragic earthquakes in Christchurch in 2010, 2011, there were $30 billion of losses, and yet half of it was funded by foreign insurers and reinsurers from other parts of the world.
What problems do protection gaps create?
Underinsurance creates all sorts of problems. It means that people won't recover when disaster strikes, but importantly, it doesn't help build resilience into the community or the country right in the beginning. Because people overlook sometimes the benefit of insurance. When people buy insurance, we usually stipulate certain building codes should be adhered to, and we could advise on where to build and how to build. And therefore you can build natural resilience in just by buying insurance. So you've got a sort of double effect if people don't buy insurance.
A low level of insurance means less risk transformation, less risk sharing in our economies. A protection gap means as well that households and companies are more vulnerable and they have to face directly the consequences of risks that could have been well managed and mitigated by the insurance industry. This has consequences in terms of welfare costs, increased economic uncertainty, and maybe increased burden on public budgets.
The purpose of insurance is to enable society to be resilient. When we have insurance, we're able to recover more quickly from things that might go wrong in life. When we are unable to insure, disasters happen to people and people can't recover. So if we find a way to create that resilience through broadening the product and making it more accessible, we help the world recover more quickly. We help take the mind of our clients off of those worries, make them focus on what they do in life, and then we can really make a huge difference. So it's as big as it gets.
How can protection gaps be tackled?
The protection gap must be tackled from different perspectives. On the customer side, the real problems are lack of awareness and difficulties in making decisions, appropriate and unbiased decisions about risk and coverage. On the supply side, the insurance industry should design products and solutions easier to understand, more comprehensible, more attractive, more affordable. Affordability is an important issue and technology can help reducing transactional costs. Additionally, we should explore the cooperation between the public and private sectors. In Europe, we have some examples of successful public-private partnerships that could serve as a reference for further initiatives to expand the insurance coverage.
We've got to tackle underinsurance by lots of collaboration. There's got to be key public and private partnerships. The insurance sector has got to work with the public sector. We've got a great example in the UK. The Department for International Development funded the opening of a centre to look at global disaster protection. And we're going to set it up with experts from the insurance sector, working with other experts from other fields to think about how we can actually help those economies which are really affected by tragic events like hurricanes, earthquakes and things, how we can help build more resilience into their communities, and then importantly provide them with financial support when things go wrong.
You know, the first, we have to have the will. We have to say, we find it unacceptable that things we know how to do aren't doing what they could for society. We just have to declare a stop to that. But then it always roots in the same things. Do we have enough information? And if not, how do we get it? Because we have to have information. That's the raw product that we can turn into insurance services and goods. The second thing we have to have is a legal system that actually understands what it is we're trying to do and creates the rules of the road so that the products work. And third, we have to have an understanding on the part of governments where insurance is not a big part of the solution for society, why it is a more efficient solution than to just say, make it a government program. If we have those three things moving in the right direction, we can get this done.